Aloha big wave trading family. Hope you're having a great weekend. There were actually quite a few stocks to consider for new long positions. I do understand that Friday was quadruple witching. However, lately a lot of the long signals that have been coming on options expiration dates have been doing very well. But I want you to notice something. Last options expiration back here in March, look at what the market did shortly after. Look at what happened after the June options expiration. So it'd be interesting to see if we're going to repeat this pattern. And with the weird mixed sentiment, it's always possible. But these long positions, they could all fail. They could all work. Half could fail, even if the market goes up or down, because this is a very weird, very weird uptrend. Any kind of price bar like this, and especially followed by this, can easily turn into a swoosh lower. So the mere fact that we don't swoosh lower, it makes it impossible to clear the decks, find the brand new leaders, get a higher VIX reading so we can get more alpha out of our returns. And it also just makes for a very weird overall uptrend. It doesn't show that much here, but the IWM on FinViz, like if you look at this index, the Russell 2000 since March, this is pretty ridiculous, folks. So it's pretty impressive that we've got the gains that we have, nearly a 20% return in the cash account, nearly a 40% return in the margin account that I do have on my end. I know some subscribers are doing well, so I guess it's a testament to the methodology. But the main thing is, make sure, like I said, normally it's 10% every 10 signals, but make sure you go long signals that are less risky. So the new long position, JNCE, this is a pretty darn good long signal with a limit order at 1530, using the first stop at 1465 and a final stop at 1441. And if you're really brave like me, because you can't get a large position, you're going to use 1310 as the final stop to give it some more room to work in case Friday is a fake out. But this is a nice pattern, and it's got the appropriate reward to risk ratio if it can get all the way back up to its old highs and then potentially even break out to go to new highs. But the main thing is that it has low risk. So while it's not the highest quality of stock, it's definitely not extended. Oops, this is coming up, C cleaner, during the video lesson. So it's definitely not extended as it's touching all the moving averages. So it's definitely can be a consideration, considered a long, wow, it can be a long consideration for anyone. The only thing to keep in mind is that it's not a high quality stock, i.e. canceling quality or perfect speculator quality. So you have to treat it as such. Now the ad signals, two are of higher quality and the other two are of semi-higher quality, so we'll move on to there. But first off, JNCE, I got 1% for being in my price volume BOP surge scan and 1% for being in my IPO scan, so it's supposed to be a 2% signal. I'm only going to be able to put about $1,500 into every single new long position I take, speculative, 1,000 up to 2,000 for the high quality. No more, no less. I'm fully invested. There's nothing I can do, but with only $1 commissions, I can just split everything up down the middle, see what works, what doesn't. And the main thing with all the new long signals is the reward risk ratio is great, but the risk is very low. We have LHCG as a solid ad signal. You can see the surge in BOP volume in the candle over candle price bar, but the first cut loss level is just these recent lows. And then if you use to this level right here, you're only risking 4% of your capital on this trade, and once again it's not extended, so everything's lined up just like JNCE. So the game plan with LHCG is to get long with the limit order at 65.86, first cut loss level 64.38, final cut loss level 62.83. It's 2% because it's canceling quality, 2% for being perfect speculator scan quality, and 1% for being in my price volume BOP surge scan. Total 5% position if it was new, but it's an ad signal, so it's supposed to be 2.5%. But like I said, about $1,500 to $2,000 for me only, fully invested. But it's a very solid ad signal. Then there's CAI. This is a very beautiful chart. It's one of those charts that whenever I have it on a certain Zoom feature on Telechart from March to September, it has no red BOP. There is 0 red BOP bars down here. I love charts that look like this. There's some tall red volume bars in here, and there's a lot of red volume bars here, but there's tall green volume bars also throughout the chart pattern. holding its 50-day moving average. A lot of those open body candle price bars. And now we have a bounce right off the 50-day moving average with a near high a day close. Nice hammer candle pattern with the above average volume and green bop. I want to get long CAI, limit order 2803. My first cut loss is going to be 2655. My final cut loss is going to be right here, 2561. So I'll move below 2561 and I will be all out of CAI. But very, very, very nice chart. And then the two, by the way, CAI, forgot to mention, it's halfway canceling quality. Let me just make sure. I got to check my notes really quick just to make sure that that's what I want to say about that. Like I said, I wish you guys could see my notes. They're a mess. So CAI is perfect speculator scan quality. I have it here as a semi-canceling quality stock, and it was in my price volume BOP scan. So if it was a new signal, it would be 4%, but as an ad signal, it's 2%. Next up is SSNI. SSNI is also a canceling quality stock. Well, once again, it's one of those semi-canceling quality stocks with some huge earnings and sales growth in the most recent quarter. It was also in my price volume BOP scan, but the issue with SSNI is that it's slightly extended from the 20-day moving average, as you can see. So you don't want to chase it. So it would be a long with a limit order at 13. Your first cut loss level, I would use this low right here. Let me see what that is, 1260 if I have that in my notes. I got 1265, which means I'm using the green candle bar with the green bop right here. So my first and only my first cut loss is going to be 1265. I'm really having a tough time making this video lesson tonight, everyone. It is a late Saturday night. I have not been drinking. It's just pretty late. It's been a long day. And then the final cut loss level is 1234, this low right here. This is an ad signal. So normally SSNI by itself would be a 2% signal, but it's got to be halved, so it's 1%, and then it's got to be halved again, so it's technically a 0.5% signal. And then the last ad signal is EVBG. EVBG, once again, I really like this chart. Why? No red bop, 0 red bop bars. Do I love it? No. Do I love CAI? No. What would make me love it? If every bar was green with max green bop on this side. Same thing with EVBG. So I don't love it, but I do like it. EVBG, same issue as SSNI. Extended a little bit from its 20 and its 10-day moving average, but it's right at its 50. Another pocket pivot point signal following a flurry of them. That's what this blue spike bar is. And with all that green bop, it's good enough to go for me. So with EVBG, I want to get long, limit order at 2350. First cut loss level, 2240. Final cut loss level, 2156. Want to give this one room to work because of how nice the chart looks. And once again, I can't get a full position because I'm already fully invested. Now with EVBG, this is a price volume BOP surge stock only, so it normally would be 1%, but it's got to be half, so it's 0.5%. And since extended from the 20-day moving average, it should be even knocked down further to 0.25%. Considering that the ideal portfolio would be 5 stocks, 20% of my capital in each stock, following a massive correction similar to what happened from 2000 to 2002, similar to what happened in 2008, we're a long way from home. So 0.25% of the capital is supposed to go into this. This would only be 1,000, but like I said, I want to average everything out, so I'm going to even probably put it more up towards 0.5%. But EVBG, nice ad signal, just a little extended. SSNI, nice ad signal, just a little extended. The safe ad signals is going to be LHCG. It's probably the highest quality one. Perfect speculator and canceling quality. And then CAI is probably the best looking chart. And then the new long position, JNCE. So some pretty solid long signals. Also have a few oh, this video lesson's been a treat. I also have a few speculative long positions listed on the new positions page for platinum subscribers. All right, everyone, that was a difficult journey, but I've finally reached its end.